The US government has taken a near 10% stake in Intel, a rare and strategically significant event. What's happening? A historic investment. In August 2025, the US government invested $8.9 billion to acquire a 9.9% stake in Intel, making it the company's largest single shareholder. Where the money came from, the funds were drawn from previously awarded but unpaid grants, $5.7 billion under the CHIPS and Science Act and $3.2 billion from the Secure Enclave program. Terms of the deal. It's a passive stake, no board seats, governance, or information rights for the government. There's also a 5-year warrant to purchase an additional 5% stake at $20 per share, but only if Intel loses majority control of its foundry business. Why this matters, and why it's rare. Not a crisis bailout. Unlike previous government interventions during economic emergencies, e.g., the 2008 auto and bank bailouts, this move isn't a response to a crisis. It's a strategic play to boost domestic semiconductor capacity and compete globally, especially with China's rising tech influence. Strategic significance amid global tensions. US officials are aiming to bolster chip making at home, specifically reviving Intel's competitiveness, to reduce reliance on Taiwan and TSMC, especially given geopolitical risks like potential instability in the Taiwan Strait. Risks of politicizing business decisions. Analysts warn that government stakes can introduce political pressure, even without governance rights. It can compromise decision-making, trigger inefficiencies, and stifle innovation, concerns not unusual in state capitalist models. Perception among peers. Palantir co-founder Joe Lonsdale called the move uncomfortable and very concerning, referring to it as cronyism, and pointing out how unusual it is outside emergency contexts. Republican critics, including Senator Rand Paul, labeled it a step toward socialism, even as President Trump defended the investment and promised more deals to follow. Market reaction, mixed optimism. Intel's stock saw a bump, ranging from roughly 5.5% to over 7% after the announcement, reflecting initial investor optimism that government backing could stabilize the company.